Welcome back again. Second time this week. Appreciate everyone taking the time this afternoon to check in with us. Just want to thank everyone who purchased the book, Net Lease Playbook. Starting to get a lot of traction on Amazon. So again, if you want to get that bonus material, just shoot me an email at dclark@americannetlease.com. So I'll just kind of getting together some show notes. Mondays we'll kind of reserve. We're kind of playing around with the schedule to see if we're going to do it 5 days, 3 days, and kind of taking the temperature of the room and kind of planning for that. But again, the main reason is because I want to start packing in a lot of educational material. As you can see now, the market is going through rapid pace. That's one thing we hear. Pros and cons is that the administration, a lot of stuff in foreign policy, a lot of stuff for policy. There's a tax bill that's moving forward. We're going to break that down probably in next couple of days as it kind of let people digest it and kind of put in digestible formats to see what affects investors in the net lease space. There's a lot of movement going in as far as reactionary moves from companies and due to tariffs and strategies as well as the kind of the economy and overall. But again, we want to focus on essential net lease properties, which is why you're here. So we're going to kind of pick through the news as best as we can. Again, if you see something that's very interesting, shoot it into us so we can be able to cover that, so we can make sure that we give you all the necessary tactical strategies so you can be able to make the best decision moving forward. So again, Mondays, we're going to just have cap rate data because we aggregate that throughout the week and then have it prepared by Friday evening. So then by that time Monday comes around, we can share that data with you. And then the rest of the week, we're playing around as far as what we're going to be covering, but it's going to be anything that deals with essential retail news. I'm not sure if any of you, either brokers or investors, been to the ICSC this weekend or this week in Las Vegas. Didn't get a chance to go. Maybe next year. But I do have a speaking engagement in June. I think it's June 4th to the 7th in Indiana. And I'll send out the link in the newsletter if anyone happen to be in that market or want to attend that. It's called the Landlord Conference that they have each year. They kind of change it in different locations, but this year is going to be in Indianapolis, Indiana. So look forward to that. I think that's going to be a really informative place to meet investors and also kind of talk about alternatives such as net lease. So top of the story, kind of the big one that took the biggest cake was of course, Walmart declaring that they're going to be increasing pricing due to the tariffs, despite them having kind of a over expectation as far as profit margins. So, but again, the reason why we're kind of taking a look at that as them being one of the largest employers and retailers in the country. So we tend to kind of look at what they're saying as another benchmark item to see where the overall market is at. Since they're kind of in that essential space for goods and services, but they also have a mix of kind of everything. They're kind of like an everything store. So that's like a top story. But coincide with that, you have Home Depot, which says that they're not going to increase pricing, that they're kind of going to stay the ship. Kind of some quotes mentioning about good relationships with their local suppliers. And then as far as how their stores have been performing nationwide, they've been doing quite well. So that's kind of good news for our Home Depot investors and people who want to look into kind of the DIY space, which again, those are the bigger players, them and Lowe's. Don't have any information on Lowe's and what they're doing. But to kind of kick off for some other news, what has been trending at ICSC 2025 this year? A very interesting quote or a couple quotes or some statements from the president of WP Carey, which is one of the largest investment REITs out there, Michael Fitzgerald. And he emphasized a lot because, of course, our industry is highly affected by a lot of these movements around trade and things that's going on in the market. He essentially, which we've been saying over and over, and is quite obvious, is the focus on essential needs. And he had mentioned particularly grocery anchored centers, pharmacies, and value driven retailers like dollar stores and other necessity based retailers. And he just kept kind of refocusing on that. And they was talking about the data of lower vacancy rates for these tenants and in the grocery anchored sectors, that if you're able to get out parcel or near these types of neighborhood shopping centers, there's a higher likelihood to have a lower vacancy rate because of the amount of traffic for the daily consumer needs that these retailers provide. So that's just a key thing that kept being talked over by all the attendees and the speakers at the conference. And again, those are the same stuff we've been, continuously beating the drum over, as far as kind of your focus is essential needs. So a lot of this stuff is a lot of noise in the market. And again, we don't take it lightly. We want to make sure that we're taking in all the data that we can in order to make the best decision. But again, we have to put into the mindset of the day-to-day consumer. So either you're high-end consumer or average or low-tier consumer, everyone uses these products and services on a day-to-day basis. So as we continue to train and do information breakdowns of different strategies, there's always going to be a focus around the daily needs of consumers, which is the people who pays the bills, which ultimately pays the rent for your property that gives you the income. Some other cool stuff, which is kind of not related, but just kind of want to bring it up, and this is kind of still on the topic of ICSC. Just kind of talk about what has been kind of reviewing what's been trending on X, and talking to some of the people who've been at the event and hearing what they're saying. Is experimental retail boost, experimental retail, which includes certain type of health, which it means um, kind of specialty health type of retailers, specialty treats, pet focused retailers. Those has been kind of the talk of ICSC, as people are starting to get creative with the available space that are opening up from the other retailers that are shutting down. So those spaces are becoming opportunities for investors, and then they're seeing outside of the essential space what other tenants could be a potential fit. So tenants like Petco has been brought up, and other was another one, Quinn, Petco, PetSmart, uh,
Pets Club.
yeah,
Pets Club.
those type of guys were. And again, that's also kind of necessary because again, those are pet food, pet supply type of stuff where you're always going to have them type of retailers and not always going to be directly supplied from the big box stores. That coincides with the information about the amount of retail availability, which hit over 755 million square feet, which is the highest since 2002. So why does that matter for us net lease investors? Is that is there's more ample opportunity, depending on the location, of course, to get on the value add side. In general, we always discuss kind of the longer play, but again, for the investors that are looking for value add, we can kind of see what availability is there and what essential space could be, made a good opportunity. So, and again, this is all talking points coming from ICSC, which is the largest retail industry conference in the country. So all the brokers, all of the top um, investors, firms are there. So it's good to kind of be kind of a fly in the room to hear what's going on, so you can kind of keep in the know with the multiple conversations that's going on to see what can make sense for you and your strategy. We've alluded every week as far as kind of impacts on tariffs. So there's multiple stories. And again, the consistent theme that's been going on, I've been seeing kind of all of the trending words, grocery anchored essential needs. So we see a lot of Aldi has been brought up, which is a kind of a smaller scale grocery store, more affordable based stuff. They have a lot of private items which are more affordable. Those has been popping up, and those are good opportunities there. And Dollar General, I know we kind of addressed that yesterday about investors kind of cautious about Dollar General as far as their locations and stock going down. But again, that is just a kind of a fluctuation, and I don't look at it in a just a day-to-day type of trading scenario where we're going to see numbers go up and down all the time. We just know that based off the business model and based off the real estate itself, it's going to be sound, and that's where we're kind of hyper focusing. And then, of course, we bring in any additional data that supports it to make sure that that's going to be a successful investment or potential successful investment for you. So, I had another story in regards to what's this?
And Dwayne, I forgot to mention yesterday. I know we spoke about Dollar General, but I know Dollar Generals are starting to do the Dollar General markets. A lot of people aren't familiar with those, but those incorporate the grocery component as well. So that's something that people should be on the lookout for as far as including the grocery there.
Yeah, that's just it's still Dollar General. It's just their focus more. It's a larger footprint building, and it has a area where a majority of the store is grocery style items. So you have your bread, cheese, milks, and other items there, and those are starting to pop up as well. And that's building in that same competitive landscape as Aldi, which I've sold several of those as well. So again, those are stuff to kind of keep an eye on. And last story is kind of just the hyper focus on the certain areas of growth. Here, what's been trending is just kind of talking about suburban markets, and again, that's a market by market basis. We'll have to kind of dig a little bit deeper in that, but the landscape is definitely changing. So these larger companies are looking at all of the markets and seeing where is the trends, where people are trying to shop, what's going to be comfortable for them to get to their stores, and where is the population going. So suburban markets and specific areas do make sense, and we're seeing kind of growth in those markets as well. So that is it. And next time, I think I had a couple links, but not necessary to show today. So kind of let's just jump into what I had for our training today. And again, as I get ready to load this up, anyone who wants to jump onto Amazon and grab a copy and then shoot us an email so we can be able to get you on that list. Let me just pull this thing up here. So it's based off of today's news stories that I wanted to kind of hyper focus on the essential retail. Usually, a lot of the calls that we're having with investors is this immediate knee jerk reaction to say, what is up, what's going on in the news in regards to economic reports and tariffs, and what does that mean, and stock prices. Again, that's on obviously a macro level. We want to look at it on a micro level and kind of look exactly what we're hyper focusing on, because you have essential and non-essential. So the non-essential, we've been seeing a lot in the news, like these large major retailers in clothing and consumable goods are having issues, and also is making more pressure due to any type of tariff related supply chain, which can highly affect their margins, and they'll have to pass on to consumer, and then already struggling with people spending less in stores and things of that nature. So again, we're hyper focusing on essential, which is grocery, pharmacy, dollar stores that have consistent traffic. So every week, and it seems for me, I call it. My dad used to say the same thing when I was growing up. He's like, every time I leave the house, I spend $50, and I'm like, why he keep saying that? And it's true, because every time we go, you go to a grocery store, you're picking up here and here, and all of a sudden you're spending $50, and everybody's doing the same thing. And I'm at almost the grocery store maybe twice a week sometimes. Um, and that's just the thing is it's like you have consistent traffic there, and that is why if you hyper focus on good synergistic tenants at these areas, that it'll make sense. So the hyper focus on that rather than a store where that I haven't visited in years. You just go on Amazon or you go some of these online retailers, and it's just unfortunate, but that's the way things is. That you can order stuff right off of your phone, and they'll be delivering to you sometimes same day or the next day. So can't beat that. That goes in, and what I was talking about here with some of the store closures, which exceeded almost 1,300, from Big Lots to Joann's. I remember as a kid going to these stores consistently every single time. Now these they've been struggling for years. The writing's been on the wall, and now it's just kind of stampeded with kind of the mounting pressures to keep open, and it just just too much to bear. So it's going to leave a huge amount of vacant space in these lots. Where now, when I was talking about earlier, is based off of what the chatter is at ICSC, is going to bring in some opportunities. So there's going to have some creative things to be going into those spaces and subdividing them and seeing what works, assuming that they're in a uh, retail center that is drawing traffic from all fronts, majority coming from grocery anchored or essential services anchored. So um, the market's remaining strong as far as the tenants. This is kind of the price per square foot, and as far as sales. And again, all of the data is consistent over the years of the necessity need, and it's been consistent. So that's why we'll see where pricing is at when people are looking to for acquisition. So again, we're going to keep an eye on the holistic market, what is going on, and what's going to be truly affected, and if it's going to be a long-term thing. So going back to yesterday's question about stock market uh, shifts, it's going to be going up and down. But again, we're looking at from a long-term play. If it meets all of the metrics of these types of sound business plans to bring in consumers, like Dollar General Market, Aldi, discount grocers, is going to have a nice rent to sales ratio. So again, and then going back to yesterday's presentation in regards to how we're going to be underwriting tenants that are not these investment or corporate grade rated tenants, to make sure that there's enough buffer, that you're underwriting it properly, to make sure that there's it's consistent across the board. So this is kind of going back there, how we're underwriting. We're going to make sure that we're real conservative with our numbers. Same with our financing, and just making sure as far as you're planning out in a 5-year exit, and then making sure that we're checking. This can affect the numbers deeply. Is making sure that it's a triple net if that's indeed what you're looking to pursue, and then including with that, and that's almost hard to see now. I mean, some tenants pay a premium to have a flat lease or just have one bump, which would be in the options period. But ideally, we want to see some type of rent growth throughout the lease period as a hedge against inflation. And then, most importantly, no early termination clauses, which I've seen my handful of those. So you want to make sure that you're double checking, asking the broker, asking the owner, hey, what is going on with any clauses in the lease that that the tenant can potentially exit early, and then leave me vulnerable in that standpoint. Competing again, we want to make sure that we're hyper focusing on areas that are either off market or maybe secondary markets. Along as it from primary market to secondary market, you're always going to have consumer needs no matter what. So again, looking at all of the intrinsic values of traffic counts, demographic breakdown, and if there's a tenant to market match, and to make sure that there's a good synergy, as well as is it near other major retailers that's drawing all of the people that are essential services like grocery stores. So those anywhere that's kind of like near or out parcel grocery stores, or even large retailers like Home Depot or Lowe's, those are good signs because it's going to be drawing traffic, and again, those are all essential retailers there. So anyone who wants to kind of have us break down either your next acquisition, give us a call. We this is all we do, so we can be able to pull up active comms, do deeper research on the local market, analyze the tenant if it's a franchisee to see that the numbers hit the metrics, and then we can reverse engineer to make sure that what's your target monthly or annual NOI, that we can be able to meet those needs. Again, it's a lot of properties out there in the market. There's a lot of pressure for you just to kind of take what you see immediately. And again, this is all we do. We're probably looking through 300 to 500 properties per day, just kind of scanning, looking what's good, and going through our criteria of our clients, and then seeing ultimately what could be a good fit for you. So again, getting early in this process, especially if you're 1031, so that you have enough time to kind of sift through to make sure what's a good fit. And then also give us time on the back end to make sure we can get to double check what's on the lease, what's going on with any background information. Uh, Yesterday was a interesting call we had in regards to stuff that wasn't revealed in the package that has to do with out parcels of shopping centers. Especially if it's new construction, some of the stuff, the details can be hazy, and some of those stuff need to get cleared up. But we don't know that until we attack it early as possible and not wait to the last minute. And this is regardless if you're going to a 1031 or it's just a regular purchase. And then also getting your team in place. So it's mortgage lender, attorney, and just having ample time to make sure that we're going through this so that it could be a smooth transition from the offer all the way to the closing. Um, Anyone, it's a good idea who uses social media, jump on X and start following any trending hashtags that has to do with ICSC. They're going to be citing a lot of the information I was kind of talking about on the call as far as what these investors are talking about, what they're looking for, what their target is. So you have an idea. So you're kind of in the know. So you're kind of making moves as they're making moves so that you make sure you have ample opportunity either on a purchase or a sale opportunity. So, just kind of keep up with that and just keep tuning in. We're going to be constantly scanning the news and kind of bringing forward, what makes sense, and, keep it moving from there. So as of right now, like I said, appreciate anyone who's, on the live right now and checking us out. I will go through a couple, Rich. We kind of went through in our talk because all these questions are pertaining to kind of current situations. So I think I had that tag up.
Hey, Dwayne, I was going to ask as well. I know some people who get financing. I know we spoke about Dollar General and all these. Are there any other tenants that you could recommend as far as that would be able to give them a nice yield on return and that are safe as well if they were looking to finance?
Yeah, I mean anything that deals in essential services or food. I mean that's really what it is, and that's what we've been kind of covering here, is that stuff that is going to be consistent with traffic. As far as return, that's like I said, it's all based off of kind of what the investor's goal. That's kind of the first thing that we get is just like what is the highest cap rate that they can get, and that's kind of relative. The way that net lease is structured is more of a conservative type of return as compared to other assets. So just kind of being realistic, and that's why we do so much reporting on the cap rates and kind of the news to kind of give as much information and say, hey, this is where we're at with it. And based off of your goals, particularly when people are coming out of exchanges, they're like selling, rental properties or something where they're used to a certain type of yield, and they may have to see if that's something that they will consider to go in it. But in exchange, you are not responsible for anything, and now like you free up your time. So what is that worth to you? So services that we've been talking about a couple of streams ago can go into like auto repair, things like car washes, which are offering a higher yield because it's a very niche thing. Caliber collision, which is the collision space. those been offering a good return as well. So there's stuff to look on that mainstream. Of course, like I said, your top fast food things that um, have been doing well in the past, and it's been consistent. And the good thing is to make sure that they have, the typical rent bunch structure. We underwrite it to a 5, 10 year down the line, and see if those numbers are you're comfortable. And of course, adding your financing component, being extremely conservative to underwrite it, and see once we get the net profit to see if ultimately I'm okay with that number. So this really comes down to their specific goals. And then actually, once we start crunching the numbers, it ends up being less than what they initially came in to think that they wanted. So having that conversation early, running numbers, creating that buy box, and then kind of reverse engineering from there. So that's kind of the answer to that question. Um, and again, this question is pertaining to kind of what we just what's trending on the news now is how is it holding up? It's dominating. Essential is where it's at. So make sure that everything you're looking at it, you're just seeing is it essential to day to day consumer needs, and then you'll be at least in a better position as compared to other sectors that may have some more vulnerabilities. How are store closures affecting essential retail investments? Yeah, so yeah, going back to that again is there's a lot, and it's not going to be the last. So a lot of these companies are going to be shifting. They're going to be you can see bankruptcies, you're going to see financial troubles. Those going to be more higher likely to be in the non-essential space due to any type of vulnerabilities in the market and the global stage. Like I said, supply chains and tax policies and local policies, and so there's a lot of factors that's going in. So instead of having all of that to think about, you go kind of the better shot. The better shot, which will be on the central side. So you just want to make sure that those are key in your buy box. Yeah, so a lot of these, and I appreciate these. And again, we're going down a massive list of questions that we've received over the couple weeks, and I also have a huge amount that kind of pertains to other other trainings that we did. That's for essential, essential for investors. But again, tariffs, any type of economic stuff is like, what can you put yourself in the position that that individual investment, that tenant, that lease, that space makes sense long term, because we're looking at it from a long term play. And like I said in the beginning, and again, there's a lot of debate on that. I see tariffs as a negotiation which can change quite rapidly as compared to actual policy that gets enacted into law, as well as regulation, which affects, for a longer period of time. So yes, it does have a sting. It does affect the markets, and companies do quickly react to it because they're trying to make forecasts to make business decisions. But ultimately, you see that as something that can quickly be adjusted. And as we've seen early on when they first enacted them, that the markets quickly reacted, and a lot of business leaders came out against it. And now all of a sudden we're starting to see a little bit of movement, but then it started to back down, and then we see the stock market shoot back up, and a lot of the forecast for a recession had decreased. So again, it's if you end up making a huge investment decision based off of that, you may have lost out on some opportunity. And again, that's not taken in the context of all of the investment fundamentals of what we look for: location, 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 tenant, lease, structure, and then ultimately what's your income goal, and if there's any hedge against inflation, rent bumps, option periods, things of that nature, corporate guarantees. So there's so much stuff to go into it, but it's just something that you want to keep aware of. Yep. So we covered that about REITs, and again, it's just getting active, linking up with investment brokers that specialize in the space, um, contacting owners directly. In the book, I even talked about how you can send letters directly to owners, and ask them if their property is available. I think I put a couple templates in there, or you can reach out to us where we're constantly directly involved with developers, owners, and all of the brokers nationwide, where we kind of cut your time in half. And that's why we kind of provide these services, because it's only so much things you could do in a day. So we kind of hyper focus to make sure that we give you ample opportunity to save you as much time, and our expertise and connections and relationships to get you the best price and opportunity possible. Well, that is be an older question, because today's the last day, or is it? Yeah, today's the last day,
Oh, you're good. Yeah.
or it was yesterday.
Not today.
Oh, today. So I don't think they're gonna let you in. So it's done for you. So the best thing is just go on their website, check out the photos. They have a lot of transcripts, a lot of videos. There's a lot of people taking social media posts all over this, so you can kind of get a feel for it. And a lot of press release went out, because again, a lot of these major companies that invest tens of millions and billions of dollars into real estate have a huge stake to understand what is the pulse of the market. So it's always good to be in the room where a lot of activity is going. And again, this is not going to be the last of it. It's going to be trickling of news for the next couple days to at least couple weeks, where we kind of can reference to say, hey, here's what's trending nationally that you can kind of take advantage of. And the good thing too, where not a lot of people take advantages of your local RIA, real estate investment clubs, where you go there and there's local investors that own rentals and retail properties there, and you can get like the inside pulse of what's going on in your market. Things that we also do is we're checking all of the town's websites, checking with anything forecasting, anything with involves with widening of roads, rezoning, to see what are they preparing for, because they have also an insight into what's going on, where then they're able to affect local regulation, local ordinance in order to prepare for future retail that ultimately benefits the community. So just getting as much information. That's why I'm glad to kind of put this on, and it keeps me sharp at the same time, because we're just constantly scanning this, looking at deals, and we love talking to you guys when we catch you on the phone about different opportunities. So again, make sure you subscribe. If not, also send this off to anyone who may be interested, any friends or other colleagues, and let's just grow this community and just kind of take it forward from there. So yeah, 30 minutes past. That's a good time, I like, for the Tuesday, Wednesday, Thursday. Maybe we'll see how everything goes, but I like this 30-minute range. Monday usually going to be longer, because we're going to have to touch on some of the data points, and where Monday's newsletter comes out at 11 a.m. Eastern, and then go over that along with this stuff. But I want to appreciate everyone again. Here's a copy of the link. Just head over to Amazon.com, grab yourself a copy, and once this video is posted, there'll be a link to a ebook that goes into underwriting, and then you can be able to kind of get an insight. I think it's about just 10 pages, but the book goes even deeper. And then when you talk to us on the phone, we go even deeper than that. So it's multi-tiered based off of um, your level of investment and experience level. And then, like I said, we're here to help. So appreciate it again. Look forward and checking you guys out tomorrow, and have a great day.